I believe, and I say it in the book, and it's not investment advice, it's not investment advice here, but I make a statement that says that I believe that if individuals do not have 25% of their investable assets in what I consider sound money, and the two choices are gold and, well, three choices, gold, silver, and Bitcoin, they will likely experience regret, because I think that we will have inflation, and those three assets are known to protect you from inflation. And I'm not saying you got to put all your money there. I'm just saying that if you don't have anything there, and I know a lot of people who have a ton of stocks and some bonds and no gold, no Bitcoin. And I just don't think that's the right balance of, risk and reward in an environment that's likely to be inflationary. A lot of people have that balance, Mark, as you know, because we did have a big deflationary period from 80 to 2020.
Yeah.
And technology is deflationary. So
Lawrence Lepard begins by advising that the current financial system is unsustainable due to years of careless fiscal and monetary policies. He cites decades of excessive government spending and money creation by central banks as the cause of the unavoidable debt problem. Lepard claims that the global financial order is in danger of collapsing due to the ballooning of national debt, ongoing inflation, and growing interest rates. He thinks that gold and Bitcoin will be important lifeboats in the impending monetary reset, and that the end of fiat currencies is imminent. Lepard highlights that this is a structural issue that is ingrained in the very fabric of our existing system, not only an economic one. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Well, wouldn't it be a damned if you do, damned if you don't scenario, where if they were to bring the deficit down into check, then we have massive deflation, which is the opposite
well,
side
that's
of that
right.
coin.
As Luke Groman so intelligently points out, okay, fine. So you want to spend some less money and then you're going to have a recession, and then maybe the stock market's going to come down, and then tax receipts are going to fall, and so one could actually argue that the Doge, even if it works, it won't work because it'll put the economy into a downturn. I mean, the fundamental problem, Mark, that I don't think most people have really focused on is that just how large this bubble is. And it really got created as a result of ZIRP and a lot of free money. And so we had two very big instances of ZIRP. One was after 08, from 08 to 15. And then we had another one that started in 2019 and went until Powell started raising rates in 2022. And so when you have that much free money, low-cost money, financial actors and others take it, borrow it, cheap prices, use it to buy assets, lever up, and it becomes reflexively upward. The problem is when the cheap money goes away and the money supply stops growing, you're one of two ways out. Either it's all going to collapse, a la 1929 when you go into a depression, or in order to prevent, or 2008 when we would have gone into a depression if they hadn't printed money, or they're going to print the money to solve the problem. And historically, looking at the facts and what the Fed has always done, I think that faced with a big downturn, arguable depression, huge unemployment, as they said in 08, the ATM's not working, or printing the money. With the risk of inflation, they will always choose print the money versus the alternative. That's certainly been the pattern. It could change. No guarantee that it happens, but it seems likely that that's what they'll do. The first thing I say is you just don't want to own things the government can print, because the government's kind of set up to print, and debasement's a necessary event, more or less, on a go-forward basis. And so, that means that, that takes away bonds, and it takes away just cash and so forth. So you want to be in things the government can't print. And real estate obviously qualifies. As I said earlier, you get the tax issue. I believe that if individuals do not have, 25% of their investable assets in what I consider sound money, and the two choices are gold and, well, three choices, gold, silver, and Bitcoin, they will likely experience regret, because I think that we will have inflation, and those three assets are known to protect you from inflation. And I'm not saying you got to put all your money there. I'm just saying that if you don't have anything there, and I know a lot of people who have a ton of stocks and some bonds and no gold, no Bitcoin. And I just don't think that's the right balance of risk and reward in an environment that's likely to be inflationary. A lot of people have that balance, Mark, as you know, because we did have a big deflationary period from 80 to 2020. Yeah. And technology is deflationary. So, as Jeff points out, I mean, we've got this conflicting system where the technology is creating deflation, but the monetary system requires inflation, and it's at the meeting of those two that the problem has occurred, right? It's tricky, and it's going to be volatile. So I suggest people, understand what they own, and try to understand that everything they buy could go up or down, but that you don't want to get rid of the forms of money that can't be printed, because the odds are very high, in my view, that the government resolution to this will involve printing money.
Yeah.
And so they can't print Bitcoin. There are 21 million of them. They can't print gold. It's growing, the supply, but only at 1.7% a year. I think my controversial prediction is that this comes within the next 18 months to 2 years.
Wow.
And when I say this comes, I mean a pretty serious monetary event. My view is that then what will happen is the bond market will start to revolt, and they'll realize they're the sucker at the table. And in light of that, they will start to sell bonds, and so interest rates will go up. So the three things I look at on an everyday basis are the 10-year interest rate, the price of gold, and the price of Bitcoin. And I think when we see the interest rates going up, when we see the price of gold going up, when we see the price of Bitcoin going up, all of those things will indicate that, quote unquote, the money is in the advanced stages of failing. And by the way, the stock market might go up. I mean, it's such a thing as a crack-up boom where, at least the stock does. I mean, in hyperinflationary economies, stock markets have gone up, and they do that because the stocks represent a claim on a business. But the purest play for monetary debasement are these forms of money that can't be printed. And I think that it'll come to a head where the Fed will then be forced to say, well, we can't pay 6% interest rates on $36 trillion worth of debt. That would truly bankrupt the government. So we're going to need to buy the debt. And so that means back to QE. And maybe dropping short-term rates down, and then funding a lot of the debt short-term, so that instead of paying, for the 3.5 they're paying now, that goes back down to 2 or something. And as a result of all of that, we get into a situation where, that the Fed buying that, they buy that with newly printed money. The Fed balance sheet gets a lot larger. Fed balance sheet right now is in the 7 trillion range. The bond market's 36 trillion, U.S. Treasury bond market. So if the U.S. Treasury bond market suddenly all revolted and said, you know what, we're not holding this. We know you guys are going to debase us. We're going to sell it all to you, Fed. Well, the Fed would have to conjure up $36 trillion and add that to the 7 that's already on their balance sheet.
The U.S. dollar's gradual decrease in dominance in international trade is one of the most significant shifts now occurring in the global economy. According to Lawrence Lepard, the majority of trade in oil and other important commodities took place in U.S. dollars for many years. This is beginning to change, though, particularly since the U.S. government froze Russia's assets amid recent geopolitical unrest. Other nations began to reconsider their reliance on the dollar after that action rocked faith in it. These days, a lot of countries are beginning to trade in different currencies and are quickly increasing their gold holdings. Central banks are rushing to purchase real gold, causing the Shanghai Gold Exchange to observe record-breaking activity. Gold inflows have increased even in the U.S., suggesting that big institutions and affluent people may be bracing for a future in which confidence in fiat money continues to weaken. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
As I mentioned, from the time Bear Stearns collapsed, it took 7 months to get a bailout, but in 2023, when we see 3 banks collapse, they had a bailout in 6 days.
Exactly, and that's they're very much aware of the fragile nature of the system, and they have one tool, which is a printer, and they will use it, which is the name of the book, right? The big print, because we've had 2 big prints. We had one in 2020, we had another in 2008, and we had a little one before that in 1998. But I think that each one is going to kind of get bigger, and each one chips away at the foundation of trust in the government and in the Fed and in currency. And so, anyone who saves capital has a choice of places to put it. They can put it in bonds, they can put it in stocks, they can put it in gold, they can put it in Bitcoin. And to me, big market indicator that trust is rapidly, slipping is, Bitcoin at 106. It was, come back there soon. And gold at 30, it's like 30.50 now, which is stunning to me, actually. I knew gold was going up, but it's gone up faster than I even anticipated. And I think that's just because more and more people are coming to the realization that you have and that I have, that is, the system is broken, and there's not an easy way out. There's not an easy way back. And we're going to have to return to some kind of a sound money system here at some point. I think the average American, is probably saving in real estate, right? They're saving in their house. That's their biggest asset, and they realize the government can't print houses. And so so it's going to go up with inflation, the cost of replacing it, etc. The negative there, as I point out in the book, and as you're very aware of too, is just the state has a first claim because it can charge property taxes.
Right.
And you can't move the house, and so you got to pay tax on the house. If you don't pay the tax, they take it away. So
yeah.
So it's not as pure an investment as a neutral currency that cannot be printed. And there are really only 2 choices there. Gold, well, 3 if you count silver, but the 2 large choices, gold and Bitcoin. And government can't print them, and so What the market is telling us is that more and more people are reaching the conclusion that the government is trapped. And you're starting to hear this from really mainstream people, even fiat people who are on the other side. They all say, even Jay Powell said it. I mean, I never had this on my bingo card. Jay Powell says our fiscal path is unsustainable. I'm like, okay, guy, that's great. I agree. You're right. So why are you enabling it?
Yeah.
I think the clues in the gold market are substantial. As you know, the country lived on a petrodollar standard, and 5 years ago, 10 years ago, 95% of the oil was traded on a dollar standard. But when we grabbed the Russian assets, that changed. And now I understand that the dollar only accounts for maybe 60% of oil sales, and the balance is in other currencies because people don't trust the dollar. And in those other currencies, if they have an excess with the supplier, whatever, they're converting that excess into gold. And so you do see the Shanghai Gold Exchange volumes going up quite a bit. You see a lot of gold being imported into China. You see a lot of central banks buying gold. You see a lot of people asking for their gold back and for, what I call repatriation. You've seen it in the United States even, where there have been large shipments out of London and Switzerland to the United States in physical, which suggests that there are people, whether they be, and some people have argued that it's the U.S. government. That's possible. I kind of doubt it. But, there's certainly probably billionaires in the United States who are thinking to themselves, gosh, I don't trust this currency as much. And, holding GLD, which is a gold ETF that, really has claims on gold, so it's kind of paper gold. They're saying, you know what, maybe you just give me the ounces.
Yeah.
And those of us who are in the gold market know that for many, many years, they created more paper claims than they had underlying ounces of gold. And so, we're starting to see tightness. So these are all, they're clues. They're kind of smoke, coming out of the windows or out of the side that indicate that maybe there's a real fire. And of course, you want to see a mass exodus towards Gresham's Law. If Trump goes and he audits Fort Knox and the gold's not there, now my guess is for national security reasons, if it's not there, they'll lie about it. They have to. But the point I'm trying to make is that there is a bid for gold, and people are losing trust and faith in the government. And so I think that bid's going to continue.
In conclusion, Lawrence Lepard is raising awareness of a problem that more and more people are starting to recognize: the seriously unstable state of the financial system today. He said the Federal Reserve and the U.S. government are in a difficult situation. Printing more money is their only viable option for addressing economic issues. They have always responded to crises by flooding the system with more money, whether it was in 2008, 2018, or 2020. Lepard thinks there are now unmistakable indications that this trust is fading. Globally, central banks and investors are subtly moving their funds from government bonds to assets like gold and Bitcoin that cannot be created out of thin air. Due to its decentralized nature, limited supply, and lack of governmental control, these assets are growing in popularity. In contrast to a property which is subject to taxes and can be seized if unpaid, gold and Bitcoin are far more difficult for governments to control. This makes them appealing during a period of increasing political and economic unpredictability. Lepard likens this circumstance to observing smoke emanating from a house. Although the fire may not be visible at this time, the warning indications are unmistakable. A growing number of people are afraid that something is very wrong. Additionally, there may be a far greater move toward hard currency like gold and Bitcoin if confidence in fiat money keeps dropping. Even prominent figures who once defended the status quo are now acknowledging that it is unsustainable. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.